that person volatility 1,000. So we have 1,000 already. Mr. Andre V what? Volatility.
So welcome back everybody. We are live. So I just want to reshare the video and I would so for those who have joined us. So earlier on the first link that I sent, we agreed on volatility 75 as the market will be what will be forecasting on. So I apology. So please kindly like the video, the live stream. And earlier today, I dropped a video on introduction to what to CRT. So if you are here to watch the video, please go and watch the video at it's going to help you to understand better what we'll be talking what the analysis we'll be doing today and the forecast we'll be doing for the focus we'll be doing for tomorrow, which is Tuesday, Wednesday, Thursday, Friday, and for the entire week and next week. So please kindly go and watch that video for your own good. So go and watch the video for your own good. So we had some people who suggested step index and boom 500. If time permits us, we would definitely look at the two together. We'll definitely look at the two together. So making it three assets, but I'm not promising. But we'll start with the volatility 75 that will have the what majority carry the vote. So we'll start with volatility 75 that majority carries the vote. So please kindly drop in the comment section where you are watching from. So we'll be going live now on the live stream. So I'll be sharing my screen now. So I hope everybody can see my screen. Everybody can see my screen. I hope you can all see my screen. So for those that say volatility 75, at least you cannot see my screen now. I believe everybody can see my screen now. So I hope everybody can see my screen. So I hope everybody can see my screen. Okay, perfect. So now, if we are talking about volatility 75 that we want to trade crash, if we want to trade volatility, if we want to trade the search inbox, sorry. So for CRT trading now, so first and foremost, what you need to do is that you need to start your analysis. There's what we call liquidity. For you to be for you to be able to understand CRT, then you must focus on your what? On your higher time frame. As a trader, there are what? As a trader, there are time frames you look out for, you watch out for, right? So part of the time frame now, you must always start your analysis from the daily time frame and the 4 hours time frame. These two time frames, you don't play with it as a trader. Right? As a trader, you don't play with these two words, with these time frames. They are very, very important. They are very, very important. So on a non, we'll look at the daily time frame. So we'll look at the weekly time frame first. So from the weekly time frame, we can say what we have, right? From the weekly time frame now. So looking at the weekly time frame, all we can say is what? All we can say from the weekly time frame. So I hope everybody can see my screen. Okay, perfect. So, or what you can say on the weekly time frame is that now, looking at the weekly time frame, you all agree that with what we have here now, right? Looking at the structure already that we have here, looking at the structure on the weekly time frame, and the video that I posted this evening talking about the CRT crash the part one for CRT trading, there's what I call liquidity, candlestick anatomy. If you look at the last candlestick that we have on the weekly time frame, it is a what? It is a bearish candle, right? It is a bearish candle. So first and foremost, now since the candle that we have in last week was a bearish candle, I'm talking about this candle here. I'm talking about this candle here. I'm talking about this particular candle here, this red candle here, the last weekly candle. So since it's the bullish candle, then all we need to do is what? Is now automatically I know that this week we are going to be what? To be bearish. Now for me to ascertain that we are bearish for this week, for me to ascertain that we are bearish, that is where my what? My Fibonacci tools will now come in. Right, that is where my Fibonacci tools will now go. So I will use my Fibonacci to measure my what? My retracement. Right? I will use my Fibonacci to measure my retracement. So automatically on this weekly time frame now, I'm going to be measuring my what? My retracement here. So at least I expect a 2.5 retracement here or 2.0 retracement. Now, the 2.5 retracement that I'm expecting on this particular market now, obviously, I know that what? We are still very far from it. So I know we are what? We are bearish. So from the weekly time frame, I've ascertained my what? My bearish to be a what? To be a bearish week. So I'll go down to my daily time frame. So on daily time frame now, the same thing that I did on daily time frame is what I also want to be seeing on what? On the weekly time frame. Now, looking at the weekly time frame, looking at the daily time frame now, if you look at very well, exactly what we have in the video that I was doing in the morning, that I uploaded in the morning, is what we have here. Please kindly like this video, please kindly like this live session, and then encourage me, drop in the comment section if you are lost. I'm actually following up with the comment section. So now what I'm going to do now is that in ICT, there's what we call the EBITDA data range. The EBITDA data range is just the process of you measuring 20 days backward from the day you are trading, or you measure 40 days backward, or you measure 60 days backward. Now I'm going to be telling you the difference between the three that we have. For the 20 days backward, that means on daily time frame, you count 20 candles backward. You count 20 candles backward. So if you are counting 20 candles backward, that means you are looking at your monthly time frame. You are looking at your monthly time frame institutional price action. You are looking at the micro structure on the monthly level. Now the 20 days, let me give you how we get the 20 days. The 20 days is what? 5 days for each week. 5 times 4. We have 4 weeks in a what? In a week. We have 4 weeks in a week. So that 4 weeks now, we have 5 active days. So 5 times 4 will give you 20 days. Now on the last stream that I did last week, which was our first one, our weekly focus 001 that I did, the video is on my YouTube, go and watch it. I said there's what our bank calls the weekly, they call it what? Quarterly shifts. If you remember very well, that was why I stopped that was the live stream that day. Now the quarterly shift is just a way of the bank looking at the what? At the yearly structure. They know that okay, from January to March, that's 1 quarter. Whatever is going to happen for the month, for that whole year, they will give you a report for it on March. Another will come months by July or June. So that is what those things are not just there. They have reason for being there. They are not just there. They have reason for being there, right? They have reasons for being there. So now, if you are counting 20 days backward, that means you are looking at your monthly structure. It is very, very important. So if you count 20 days backward, always trade, you buy at discount while you sell at what? At premium. It is very, very important you put those things into practice. So now if I'm counting 20 days backward from today now, obviously I'm still going to be what? I'm starting from this candle here. So if I count 20 days backward, so this is what? This is 26. So obviously I'm still going to be in what? I'm going to be in the discount level. right? I'm going to be in the discount level. So on the discount level, it is very, very obvious that what I'm bearish. So what I'm going to do now on the weekly time frame, I use my Fibonacci tool to measure the retracement. So we've measured the retracement. So I'm going to be doing the same thing on my daily time frame to measure my retracement. So I'm going to measure this candle. This is the week that I measure on the daily time frame, on the weekly time frame. So you can see that once I measure this now, automatically I expect this downtrend to be to be over at least half a retracement to 2.0 minus 2 level. Right, I expect to have a retracement down to so this show me I'm still bearish. So once I ascertain that now, so in CRT there's another thing we'll call your key levels now. Now the key levels now, if you look at very well now, if you look at very well on this particular daily time frame now, I have this other block here. I have this other block. So this is my other block. So this my other block is my is my key level here. So I expect the uptrend that we are currently now to get to this other block. So in the video that was doing this morning, so I expected that since we are bearish, since we are we are bearish, since we are bearish, since we are bearish, so since we are since we are bearish, I expect them so for the normal psychology for the normal psychology for a bearish candle is that you open, then you trade high. So if they are trading high now, there's no two reason for them trading high other than so if they are trading high, then that means what they want to do is they are trading high, not just trading high, they are trading high to this area here to give us the they are trading high. So now I expect the retracement to this other block here. So I've marked my key level. So the key level that I'm dealing with now is this other block here, this bell booting to the downside. So now looking at the weekly structure now, today is Monday, the starting of every week. Sunday, we start the week by Sunday in synthetic indices because it's 24/7. But Sunday, Monday, you expect the week to have start. So by Tuesday, in a weekly profile, you should see the high of the week. So I'm expecting then that today now, this current candle now should close bullish. So today is Today is Monday. So if they should close bullish on this part, excuse me. So if they should close bullish on this particular candle, then that means tomorrow I expect them to open and trade high to come and tap this other block. This is our key level here. The key level that we have here is our other block here. So I expect them to open tomorrow and then trade high. So that means in London session now, 1 a.m. CRT candle tomorrow is going to be a bullish candle. Should be a bullish candle to give us the high of the day for tomorrow, and if possible, the high that will form tomorrow will be the high of the week. For those of you that are very familiar with the ICT, the BTMM, when we say the high will always form on Tuesday or Wednesday, you expect the high or the low of the week to form. So this should be a typical example of the weekly structure that we are talking about. So since I already have this bias at hand, then I can now move down to my 4 hours time frame. I can move down to my 4 hours time frame. So on my 4 hours time frame, what I want to be seeing now is where I'm going to be marking my CRT. So it's on my 4 hours time frame that I want to be seeing my CRT. So moving down to my 4 hours time frame now, I can now mark my CRT. So you can see on my 4 hours time frame, we haven't touched our key level. We've not touched the key level. So this key level is still active. This key level is still active. So that means by the end of today now, but in less than 45 minutes or 15 minutes, we are ending the day already. So the RIP is closing is closing for today. That means the end of today, the end of Monday is by 10 o'clock. And that is why for those of you that pay attention to your email, by the time there is a shift in trading hour, they will update it that okay, market will now close by 3, by 9 p.m. or by 10 p.m. or by 11 p.m. depending on the what the change that will have in the market, depending on the time change. So now today, now we are in what, by 10 o'clock the market will close, and that's why they will tell you any position you have open till 10 o'clock, by 10 o'clock, by 10:01 they are going to be what, there's going to be a swap. Possibly if you are in profit, they will reduce your profit. If you are in loss, they will increase your what, they will deduct it from your balance. They what, the stuff that they want to distort. So this is how you frame your what, your setup. So on my 4 hours time frame, you can see I already have a what, I already have a CRT, right? Let me show you the CRT that I have here. So I have this CRT candle already. So I have this CRT candle already. So I have this CRT candle already. So they've taken out the what, the low of this CRT candle. So I know that what, for my Asian now, Asian session, I expect a what? So I expect, excuse me. So for my Asian session now, then we are going to what? We are going to Asian session. We are going for what? We are going for Asian. See the what? The CRT high already, it has been taken. The low has already been what? Been taken too. The low has been taken. The high has been taken. So for my so for my next section now, I know that what, we are going to what, the 5 p.m. section, right? The CRT 5 p.m. CRT candle. So I know that what, since they've taken out this what, this low. So another thing that helped me to know if this what, if this trade is, if this retracement is over, is my Fibonacci. I want to look at what we call it again. Let me remember how the name we call it. But we just need to measure the what, how deep an expansion will be, or how deep a retracement will be. So I will use my Fibonacci again. I will measure and measure. I want to see the market should reverse at what? At 2.0 in this situation. At what? At 2.0. So you can see I'm already at 2.5. So since I'm on 2.5 level, I might say this retracement is over, but I might not say that yet. Let me go down to what? To 1 hour time frame and reward. Let me redraw my what? My range again. So on my 1 hour now, if I want to be drawing the range, so on 1 hour, if I want to be drawing the range, you can see I have the what? So if I want to redraw my range on 1 hour time frame, so you can see now this is my Fibonacci. So I'm going to be measuring this what? This candle here. So that is my what? I can measure the what? The candle close, and I can measure the what? The wick. It all depends on what I have. So if I'm going with the wick, then that means the retracement is not over. Look at 2.0. Look at 2.0. So that means they are still coming down. So at 2.0 now, look at what we have. So it is very, very important you pay attention to this level. At 2.0, now, I told you I want to be seeing the market at what? At 2.0. You can see at 2.0, I have this what? This fair value gap trading. I have this what? This fair value gap. So that is a what? That is a key level already for me, telling me that what? At 2.0, they are what? They are coming to this range. You can see I have the what? I have the 2.0 level here. You can see this what? This fair value gap. I have this fair value gap at 2.0. You can see this is 2.0 and this is the fair value gap. So it is as easy as that. So tomorrow, drop in the comment section if you actually gain something, and please like this live stream. So tomorrow by 8 o'clock, by 7:30 tomorrow, 7:30, 8 o'clock tomorrow, I'm going to be opening another live stream, and I'm going to be showing you live how this CRT is going, how the 1 a.m. CRT is going to be forming. Right, how the 1 year CRT is going to run. So for those of you that want to see it live, by 7 o'clock, 7:30 tomorrow, I'm going to be live again to show you, and so that we'll see how the market plays out. If actually they are coming down to this level, or if actually they are going back to test the what. Don't forget that this other block that we have above here, this is where we expect the weekly high to form. So we are still expecting a manipulation to the upside. We are still expecting a manipulation to the upside to form the weekly high. So for volatility 75, we are still bullish until they tap the weekly fair value, the weekly key level, and our daily key level, that the two align together, which is this other block above. I think I've done justice to volatility 75. So we've ascertained that we are bearish, we are bullish, we are bearish for this week. But before we are bearish for this week, we expect them to form the weekly high. We expect the weekly high to be formed tomorrow, which is Tuesday. So in this situation, in the weekly structure, Tuesday is known for the weekly high. Tuesday, Wednesday, or Tuesday, Monday by London session, either of the 3 days, you expect the weekly high or the weekly low to be formed. And once the weekly high and the weekly low is formed, market to trade will expand from it. So tomorrow I'm going to be showing you, by 7 o'clock tomorrow, I'll be live again to show you live. And I'm going to be telling you the days you should trade in the week and the days you should avoid trading. All these things are what you've actually known in the ICT or CRT, but you don't know how to use them. But I'm going to be showing you how you use them live, why they are like that, where you expect to use them, the time you expect to use them, and what the market to show you to use them. So if you actually gain something in this live stream, please kindly drop in the comment section. I appreciate your comments. I would appreciate that. So I wouldn't want the live stream to be too long. So digest this before tomorrow. The replay will be available on my channel tonight. Once YouTube is done processing it, and then by tomorrow, by 7:30 tomorrow, 7:30, 8 o'clock tomorrow, I'll be live again to show you to show you practically in the live stream today. Any question?
What? Volatility and stuff.
So, guys, as of no question, can we call it again, and then we'll meet tomorrow by 7:30 tomorrow. So you can all see that in the weekly time frame. So you can all see that. So there are good. We should meet by 7:30 tomorrow. And for those that requested for Boom 1000, can we have a glance look at it before I end the live stream? Can we quickly go on Boom 1000, or we should just stick with this volatility 75 tonight? Are we good to go? Are we good to go? Can we talk about the volatility, the boom 1000, just like people have requested for it? Should we look at the boom 1000 too? Okay, so let's look at boom 1000, a quick one. So the same thing that I did on crash volatility 75 is what I will be doing on boom 1000. The same thing, nothing change. Wow. So I'm going to be starting on the what? On the weekly time frame. I'm going to be starting on the weekly time frame. So on my weekly time frame, you can see what we have. So on weekly time frame now, I can see this CRT, but this CRT has already been what? Be traded to. I can spot this CRT, and this CRT has already been what? Has already been traded to. They've traded beyond it. So this volatility, boom 1000 now, they've traded against it. This CRT here, this CRT, they've traded against it. They've traded beyond it. So they've traded beyond this volatility, boom 1000. So you can see this CRT. So this CRT, I have it there. They've what? So I have this that has been traded to already. So they've rated the low. Can see. So this bullish candle, this is my CRT candle. So they've traded below the low already. So I've seen this on my weekly time frame. So what I will do now is that I will go to my what? So what I will do now is that I will go to my monthly time frame. Right? Let me see the structure on my monthly time frame. So I'll go to my monthly time frame. Let me see what is happening on the monthly time frame. Now, on the monthly time frame now, there's something you need to pay attention to. It's very, very important. Now, on the monthly time frame, we have a CRT. We have a what? We have a CRT, and the CRT that we have on the monthly time frame is this. Can you see this monthly time frame CRT? So that is telling you overall we are what? We are bullish on what? On boom 1000. We are bullish on boom 1000. We are what? We are bullish on boom 1000 on what? Over the month. So what you see here now is normal. Is normal. In less than 4 days, we'll be ending the month of July. So by next month, you should expect a massive rally up again to continue the uptrend. So it's obvious, right? It is obvious now that what we are bullish. So the high of the CRT on our monthly CRT now is this. So we have this high to be this. So this is our CRT candle. So this is the high. So whichever way around, I expect them to what? To take out this high, any other thing. So this is my what? This is my daily range. This is my daily range on it. So with that daily range now, so what I will now do, since this candle already now, this CRT that I mark on daily on the weekly time frame is invalid, because I've seen another what? I've seen another CRT candle on the monthly time frame. So pending its time now, this is the what? This is a CRT candle here, and this is our what? Our low. Now remember the what? The rulings on CRT that you expect the what? They should take out the low of 50% of that range. So what I will now do is that I will now carry my what? My Fibonacci measure the range of this CRT candle. Since it's the what is the bearish, is the bullish candle, is going to be up, right? It's going to be what? So I'm going to measure the what? The high. So now, if you look at very well, they've traded above 50% already, right? They've traded above 50% already. So I know that possibly now, this current candle now, this current weekly candle will be closing, it might close bearish, but it's still going to close inside the range of the previous candle. So if it close inside the range of the previous candle, that is telling me that what? We are still bullish. That is telling me that what? We are still bullish. So since I know we are still bullish on that level now, so that means now I expect them to what? To come down 60%. Now for those of you that are very familiar with what? Fibonacci, now you can see my what? My 62% retracement. You can see my 78% retracement. Everything you can see it there. So I expect them to what? To rally down to that what? They've not touched 62%. So I expect this current monthly candle now to close what? Inside the range of the previous candle. So if they close inside the range of, because I now apply the words in the video that I uploaded this evening. Now I keep reference to that video because it's very, very important. It is the basic to CRT. Your open high low, your candle physiology is very, very important. So I know that what? This candle is going to close bearish. No doubt about it. And it's going to close inside the range of this previous candle. So if you close inside this way of candle, so for next month now, I know I'm bullish. Now, what is the psychology of a bullish candle? Open, low, high, close. So I expect them to trade down. Now, if they are trading down now, they want to trade down and what? And take out the what? The CRT candle that we have here this previous month. No, this previous month is our CRT candle. So I expect them to trade down and trade the low, to take out the low of the CRT candle. So if they close inside this range now, you can expect a rally up. You can expect a rally up to what? You can expect a rally up and continue the what? The CRT to take out the what? This monthly CRT candle. Is that taking? So since I've established that now, I will be what? I'll be waiting for them to what? So I'll be waiting for them to drop the comment. So I'll be waiting for them to what? To rally down. So that is for what? That is for boom 1,000. We are there. So by tomorrow morning by 7 o'clock, just like I have said, I'm going to be live again, and we will talk about the what. We will now look at the available CRT that we want to trade, whether the 1 a.m. CRT candle or the 5 a.m. or the 9 a.m. CRT candle. Please, if you find this video very interesting, please kindly like, drop in the comment section, interact guys, please. Interact and then share with what friends too. Trading should be fun. Trade with Modupetemi. In our academy, we trade smart with discipline and we make big profits. Just like we stack. So these are the narrative behind me stacking. When you see me stack, these are the things that I do under the net when I trade what? CRT. Any question? So you can drop your comment in the comment section. I wouldn't want the live stream to be too long. We spent 14 minutes or plus already. So by tomorrow morning by 7 o'clock, 7:30, between 7 and 8, 7:30, 8 o'clock tomorrow, gospel our life. We will be live again to trade the 1 a.m. CRT candle for volatility 75 and boom 1,000, gospel our life. Until the next time we'll be meeting, please trade safe. Remember to recommend our YouTube channel. If you actually if it has been very useful for you, very insightful for you, if you gain one or two things from today's live, please let me have it in the comment section. It's going to go a long way to encourage me to do more better in delivering this thing. As a matter of fact, you need to trade smart. Trading is fun. If you know, you know. And I can't overemphasize the importance of what? Time over price. Time over price. I can't overemphasize it. It is very, very important. So most likely tomorrow, I might just be streaming that. I might not schedule. I'll just go live so that it won't be, we won't have the what, the problem we encountered earlier this evening. So see you guys tomorrow by 7 o'clock, 7:30 for to trade our what, our 1 a.m. CRT live on volatility 75 and what, and boom 1000.